On today's episode, we are going to take a look at Nokia. This stock is almost up 10% as I am recording this episode. The company did mention that they are planning to re-up their guidance for the full year of 2021. So in today's episode, I want to take a look at what's happening with the stock. And after that, I also want to take a quick look at their fundamentals and just share my overall opinions. So right now, Nokia is traded under the New York Stock Exchange as ticker NOK. And like I mentioned, right now, as I am recording this episode, the stock is up almost 9.7%, sitting at $5.89. From its 52-week high, this was one of those stocks that kind of got a lot of attention with the overall Reddit crew and everything like that, that there were some days when they had huge volatility. But we can see from its 52-week high, which was this peak right now, is down about 10%. But if we don't count that peak, I think this is the highest the company has been in the past 52 weeks. That's pretty crazy. Right now, it has a market cap of $34.16 billion. So about $34.2 billion of market cap. So Nokia on July 13th, which is today of 2021, expects to revise upwards its 2021 financial guidance. This is the main reason the stock price is up. They did mention that in the second quarter, Nokia saw continued strength in the business. And for that reason, it's a lot stronger than they expected. They are going to revise their guidance. Unfortunately, that's all the information they gave. They gave us the previous outlook, which was reiterated on April 29th of 2021. Which kind of showed they were expected to make somewhere around 20.6 billion to 21.8 billion euros in net sales, expected to be positive in free cash flow from operations. So right now, like I mentioned, they haven't really given us any new information. They're just saying, hey, we're gonna revamp guidance in the upcoming earnings release, and the company will release that on Thursday, 29th of July of 2021. So still about 2 weeks from now. But investors got very excited and have gotten the stock price up a nice amount today. Like I mentioned, 9.7 right now. So most of you know Nokia as the phone company, right? The phones that never destroy. But throughout the years, Nokia has kind of done a lot of different acquisitions that has transformed them to a whole different company. Now they're more of a telecommunication infrastructure company. If we take a look at here, they have four main networks or four main revenue segments: the mobile networks, network infrastructure, cloud and network services, and Nokia Technologies. We can see, right, not much growth has happened, and this is for the past year of quarter one of 2020 to quarter one of 2021. This was the presentation from their most recent earnings, and we can see not much growth is happening in the company, right? There's certain services like network infrastructure that is up compared to the same time last year, but then you have mobile networks, which is down compared to the same time last year. So total revenue for this company was up 9% if you do constant currency year-over-year exchange. And before we take a quick look at fundamentals, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. Also, look on the comments below if you want to take a look at the 4 stocks I'm thinking of buying this week. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So right off the bat, I can see, taking a look at trailing 12 months, this company is not profitable in earnings, but that's sometimes a-okay in my books as long as they're positive in cash flow from operations. And they do. That means they're making money from their everyday business, and that's what I like to see. The company is not expected to be a huge growth company, 2.4%, but as they are expanding more into like infrastructure networks, and now with the expansion of 5G, A lot of investors are willing to expect much more growth than what analysts expect at the moment, and I believe that's probably what investors are looking with Nokia. But we can see, right, it's positive in cash flow from operations, which is great news. If we take a look at their balance sheet, they have about $9 billion in cash and short-term investments, and they have about $5.2 billion in debt. So again, their balance sheet doesn't look half bad either. So like I meant, to me, Nokia right now, maybe not a market I'm too interested in. That doesn't mean it's a bad investment. It's just not one that I like right now. But their fundamentals don't look half bad. All right, so next I want to take a look at this company's technicals. And I just want to make sure the stocks isn't overextended. Just if it's overextended doesn't mean it's a bad investment, or it doesn't mean a guaranteed pullback is going to happen. I just believe it increases the risk of that happening. So right now I do want to say Nokia, after this 10% gain, is a bit overextended from the moving averages I follow. Again, that doesn't mean anything. I just believe the risk is a little bit higher, but a pull down may never happen. The final thing I wanted to take a look at was this company's forward price to sales ratio. And we can see, compared to January of 2020, right now the price to sales ratio is about 1.2. This is actually very cheap, right? It's a company that's positive in cash flow from operations, that has a strong balance sheet. But we can see, compared to where it's been in the past, this is a lot higher. It's pretty much, I want to say, at its peak. If we don't count this huge volatility move on that one day, right now it isn't peak on forward price to sales ratio. Again, it doesn't mean it's bad. There could be so much changes in that happening in the company, but compared to where it's been in the past, it's still a bit overvalued. So let me know your thoughts, guys. Are you guys super excited that this company has revamped guidance? Are you a long-term bull, or are you more just kind of swing trading this stock? So I hope you guys enjoyed today's episode. Take care and see you next time.